Welcome. Always a delight serving you. Let's look at our stories. The Mobile Money Agents Association of Ghana says its members have not been properly engaged on the linking of mobile money accounts to the Ghana cards. According to the association, about 60% of its members will be cut off from the mobile money transfer system if the Ghana Revenue Authority and the Ghana Telecoms Chamber disconnect them from tomorrow, February 1, 2024. Speaking on Marketplace a while ago on the Joy News channel, President of the association, Della Abochi, said most vendors did not know the process, also were involved reconciling their mobile money accounts with their bank accounts for tax purposes.
The initial communication that came was that if you have not linked your Ghana card with your agent line, then you are going to be cut off or you are going to be blocked. But from the look of things and the understanding that we gathered some few days, it is not the same thing. So there was a miscommunication out over there. So as a Mobile Money Agents Association, the president, I will have to appeal to the authorities, that is the GRA, network providers, that is our principals, and then those who matter to hold on, so that we will get back to the drawing table to know and understand some of the things very well. This is purely miscommunication, because if they should go ahead and then block all the SIMs, I can tell you that about one-fourth of agents, not even one-fourth, more than about 60% of agents will be going out of business from tomorrow going, because only some few people who when the GRA started the deductions, rushed to the banks for that reconciliation. Only some few, those who go to the bank. But what about those who don't go to the bank? And they are more than those who go to the bank. So it means that those people will be going out of business from tomorrow going. And this is a very bad news, so that we should be talking about.
We will be engaging the Chamber of Telecommunications again, but until we get him, let's move on, as fuel prices are expected to go up marginally beginning tomorrow, February 1st. That's the projection by the Institute for Energy Security. This is due to a marginal increase in the price of finished petroleum products and the depreciation of the cedi. While the price of petrol and liquefied petroleum gas will go up by 2%, that of diesel will also increase by 3%. Let's share some excerpts of the statements with you. And as you can see on your screen, the IES Economic Desk analysis of the cedi performance as monitored on the domestic foreign exchange market show an exchange rate of 12 cedis, 16 pesos to the US dollar at the end of second pricing window for January, after posting an initial positive performance in the first 2 weeks of January 2024. In effect, the Ghana cedi value fell by 1.18% against the US dollar, following the 2.93%, 4.79%, and 2.44% price rise recorded for gasoline, gas oil and LPG on the international market, coupled with the 1.18% depreciation of the Ghana cedi against the US dollar. The IES anticipates price fall for all three products to go up going into the month of February. In the coming days, consumers going to the pumps are likely to see the following changes: an increase in the price of gasoline by 2%, 3% increase in price gas oil, and 2% increase in LPG price, largely as a combined effect of the Ghana cedi depreciation and the international market price rise for the products. Moving on, some taxes rolled out by the government this year were part of conditions to aid completion of Ghana's first program review under the International Monetary Fund. That's the opinion one may form after going through the latest report on Ghana. George Rafi has more.
Government has rolled out some 7 new taxes that has taken off from January 1, 2024. This was after President Akufo-Addo signed these tax bills into law last month. Key among them is the VAT on non-life insurance product, which should have resulted in 30% increase in insurance premiums and also VAT on domestic electricity consumption. But a careful look at the IMF staff report showed that some of these taxes were a part of government proposals to the fund to help improve the country's revenue situation. The report also maintained that these taxes were part of revenue measures captured in the 2024 budget and submitted to Parliament as pro-action for the first program review under the IMF program. The IMF have also raised concerns about Ghana's low tax GDP ratio. These taxes are already facing some pushback from organized labor. So if these tax measures helped Ghana pass the IMF first program review, which led to the release of some $300 million, then can government go back and review some of these taxes, like the VAT on domestic electricity consumption?
Inflation will ease throughout 2024, averaging 18%. That's according to Fitch solution. It insists the ease in inflation will force the Bank of Ghana to cut the policy rate by 800 basis points this year. However, it will take long for interest rates to fall significantly. Here is Mike Kuninga, senior country analyst at Fitch Solutions.
I think inflation, what this will also do is it will allow the Bank of Ghana to pivot to a more lenient monetary policy stance. So we believe that the central bank in Ghana will launch a monetary easing cycle, cutting the policy rate by a cumulative 800 basis points in 2024, reaching 22% by the end of this year. It will obviously take time for lower interest rates to filter through to the real economy, but we anticipate that it will gradually result in stronger consumption growth in the latter half of 2024.
Meanwhile, GCB Capital expects the disinflation process to continue, but at a slower pace, potentially going up in March before resuming the downward trend from April 2024. This, it says, is due to the unfavorable base drifts. Here's more.
Research firm said it agrees with the Monetary Policy Committee that the disinflation process is on course and is broadly aligned on the medium-term outlook for inflation despite the emerging upside risk. However, it expects the disinflationary process to be slower. The Bank of Ghana took the lead in sub-Saharan Africa with a 100 basis point cut in interest rate, the first since May 2021. GCB Capital said the rate cut could have been deeper, but for the emerging upside risk to inflation. It added that the 100% cut appears to be a conservative action, given the upside risk to inflation, with the MPC counting on its commitment to maintain an appropriately tight monetary policy stance and a strict implementation of the 2024 fiscal budget. This will sustain the inflationary outlook.
Now, President Akufo-Addo has called on fellow heads of states and the global business community to focus on unleashing the $450 billion United States dollars after-driven potential income that stands to be accrued from continental trade by 2035. A key step to achieving this, according to the president, is for all within the global community to support the call for a new investment approach that prioritizes mutually reinforcing partnerships between the private sector across the economies of Africa. The president was speaking at this year's edition of the Africa-Italy Summit at Rome, Italy.
I think that the relations between our two countries are excellent. They're growing stronger and stronger in all spheres. We're talking about economic relations, Austrian companies that are doing work in Ghana, more Austrian companies that we're anticipating will get involved in our country. We're looking also at the strong political relations, the security cooperation that we now have with Austria. We've identified several strategic anchor industries, the automotive industry, manufacturing of machines and machinery components, pharmaceutical and textiles and garment industries are areas in which we are looking for significant investment. We think that Ghana is today the commercial capital of Africa. We're hosting the African Continental Free Trade Area Secretariat is located in Ghana, and therefore makes Ghana a natural gateway to this huge African market that is evolving. And we believe that those who can get in on the ground floor early are the ones who are going to reap significant benefits from it. And we are looking forward very much to Austrian participation in the development of these industries.
A little longer in the business environment, as the Director of Investment Services at the Ghana Investment Promotion Center, Edward Ashon-Lartey, has pledged his outfit's commitment to creating a favorable business environment. This, he said, will help Ghanaian and global businesses to leverage the African Continental Free Trade Area to increase trade volumes in the country. He was speaking at the opening ceremony of the Global Sourcing Exhibition.
Global Sourcing Exhibition and Forum seeks to facilitate interactions between Indian companies and potential Ghanaian businesses to explore mutually beneficial trade relationships. The exhibition focused on the textile and clothing industries. Delivering his address, Director of Investment Services at Ghana Investment Promotion Center, Edward Ashon-Lartey, emphasized his outfit's preparedness to create a favorable environment for investors.
We are confident that the discussions and deliberations that unfold during Global Sourcing Accra will not only enrich our understanding of the global marketplace, but also inspire concrete actions that propel our industries forward. We've all been talking about the African Continental Free Trade Area, and Ghana proudly hosts the Secretariat. So the least that we can do is to create an environment which will enable our companies here to produce and take advantage of the huge marketplace that the Free Trade Area Agreement provides.
Regional Director for the Indian Chamber of Commerce, Dembalaya Banerjee, says measures are underway to increase trade volumes between both countries.
See, India is already exporting on an overall basis little more than $1 billion in a year on an overall basis, Indian export figure. And so far as textile is concerned, it's more than 1 billion is the export figure. So we are already doing business in Ghana. It is to strengthen the existing setups, the existing linkages, as well as to scout out for new opportunities. And obviously, once people get a lot of confidence in doing trade, investments is certainly, up the radar. And a lot of Indian companies, big companies, already have their offices here. So if there is a lot of acceptance, the trade volumes go up. This will translate to investment in the country and job opportunity and employment creation.
The two-day exhibition will provide the public the opportunity to source items from the cosmetics and health industry as well.
You're still watching Business Live with me, Emma Davis. We'll take a quick break and we'll return with the Joy Business Band. On that note, we end Business Live today with me, Emma Davis. For more business news, do log on to myjoyonline.com. But I leave you with international business.